Hello and welcome to another Luxara webinar. This one is the final investor briefing for Serenity Point. My name is Vladlen Stark. I'm the founder and CEO of Luxara, and I'm very excited to be talking to all of you and providing you the final update for our Serenity Point project right before we head for the holidays, and also giving you a little bit of an outlook into 2026 and beyond and what we're planning on doing. Why is it the final update for Serenity Point? Well, we've had a really phenomenal response from Canadians from coast to coast, tuning into our webinars, having conversations with our team, and ultimately committing to the project in Canmore called Serenity Point. So we're almost done with our raise. As I said, we've had interest across the country. We're also getting some really strong institutional interest from a couple of funds in Toronto and also from a fund from UK who might take the remaining capital allocation. So we're very excited about all these developments, and that's certainly funneling the demand for our future projects, and of course validating the new model that we're bringing to Canada that I look forward to discussing today, as well as in the other webinars that we'll be hosting in 2026 and beyond. Before I move on, just a huge shout out to our marketing team. They have been phenomenal in really standing up an amazing campaign for Serenity Point and for Luxara in the last sort of 6 weeks, and we've had a tremendous response. So thank you folks for joining. Thank you to my team, and I look forward to the conversation. We do have a Q&A box available, so as you have questions that come up during the presentation, please put them there, and then I'll do my best to answer them as we progress. Before we get too far into things, I just wanted to have a quick disclaimer here. Everything we're talking about today is just for informational purposes. Nothing I say today is in any way solicitation or offer to purchase securities issued by Luxara or its subsidiaries. And as a CPA, nothing I say or do today is in any way financial, tax, or legal advice. So with this fun stuff out of the way, let's talk about Canmore. So why Canmore, and why are we excited about Canmore? Well, Canmore is one of the strongest rental markets in the country. It's one of the top tourist destinations in the country. It's in the top 5. Places like Banff and Lake Louise are iconic destinations in the Rockies. And because those locations are within the national parks, Canmore has really become a strategic sort of base camp where you set up shop and you visit all these different destinations in the Rockies, as well as skiing and various other experiences. And because it's been so popular with the tourists, we had record attendance to Banff National Park in 2024 with 4.3 million tourists coming through. There's just really not enough capacity there to house all these folks. So Canmore has become that hub. And it's really been getting developed in its own right to become a destination of its own. Some of the numbers on the page here, as you can see, the visitor spend hit almost $14.5 billion in 2024, which was a 12.5% growth from preceding year. All of that is fueled, of course, by the strong performance of the national parks, but also a lot of concerted effort, not just by the private sector, but also by the government. Those of you living in Alberta perhaps have heard of the higher ground tourism strategy by the provincial government that aims to increase that tourist spending to about $25 billion by 2035. There's also a lot of projects that are planned for the Rockies and for Alberta, like the rail system going from the Calgary International Airport all the way to Banff, that will only further increase the demand for that destination. There's also Canmore specific projects like further developments in Three Sisters, in Silvertip, and also the big projects like the spas that are going into the region, and some future developments of condos and various other assets. The market itself is exceptionally strong when it comes to occupancy. The 77% average occupancy across all assets in 2024. A similar trend persisted, from what I understand, in 2025, and we certainly look forward to capitalizing on that trend. And of course, the equity appreciation is another big component of real estate investing. Of course, as all of you can appreciate, very strong growth in real estate prices since 2019. The interesting fact about this 76% appreciation is that that's an average number. The median home price moved by about 57%. So really, this 76% is driven by very strong growth in the luxury segment of homes over $2 million. Serenity Point is an $8 million project, so it certainly fits that mold, and we look forward to capitalizing on this trend going forward. And we do believe that there's a really strong long-term demand and capacity constraints in Canmore because there's only so many lots that you can develop in Canmore and specifically in Silvertip where this property is. So, what is Serenity Point itself? Serenity Point is located in the Tranquility Place or Mountain Tranquility development, just south of Silvertip. This is the state of affairs right now. It's being built by Kidner Construction, which is one of the top builders in Canmore and in the Rockies. And it's a stunning 3-story full walkout, 6-bed, 6.5-bath home, 3 fully covered decks, panoramic views of the Three Sisters, which is one of the most iconic shots in the certainly in the Rockies and perhaps in all of Canada. You also have the panoramic views of the mountains all around you and south to north that are pretty much unobstructed. Behind the home, which is why I love this lot in particular, the trees that you're seeing, that's the wildlife corridor. So that is forever preserved. It'll never get developed, and you'll have this pristine backyard as long as this property is owned by us. And Silvertip is, again, one of Canmore's most desirable locations. Silvertip Golf Course is a world-class course. It's also a venue for 120 plus weddings every single year. So it's just a phenomenal place to be. So the home itself, the project value is about $8.4 million. $8 million of it is the home, and then we're also raising $400,000 towards a $200K of furniture fund and $200K of operating fund to establish operations for the next year or so. We've secured debt on the property of about 50% with a credit union, a small VTB with a developer, and we're raising $4.4 million as equity, at 1/8 being 550,000 of that 4.4 million. As I mentioned, there's been really strong interest from individuals, and I'll elaborate why individuals have been interested, and I'll also elaborate a little bit on why the institutions have been interested as well in the next handful of slides. So what's really neat about this home is that not only is it just so grand and so large that it can house very large parties, it's also the first of its kind, or this particular development is the first time that luxury residences or even detached homes are zoned for tourism. If you visited Canmore, you know that there's plenty of accommodation, but most of that accommodation is townhomes or condos that are multi-rise or hotels. There is a handful of 4-star properties in Canmore. There's nothing 5-star. The closest 5-star property is the Banff Fairmont. So there's a big gap in the marketplace for luxury accommodation that we certainly aim to fill with Serenity Point. And then again, this home specifically, because it is so large, it can have such high occupancy. We believe that it will have really strong demand from the wedding parties, from golf trips, from perhaps even small teams, athletes, or traveling artists. Because again, like I said, when it's built, I believe it will be one of one. And only to be trumped by the second property that we look at acquiring in the same development. And what we're really trying to accomplish here is we're really trying to capitalize on one of the strongest trends in tourism right now, which is the wellness tourism. It's the biggest growth segment in the tourism sector. It's a $6.4 trillion global opportunity. We are looking to bring a lot of the services into the home, starting with the amenities like the home gym, the yoga studio, the sauna, the spa, the cold plunge right in the home. But then we also layer in the services. So, in home fitness instruction or yoga instruction, in home massage, in home chef, and everything else you could possibly want from a true wellness destination where you wouldn't even have to leave the house to access all of these services. And I think that's really going to set us apart. So this is the progress shots. Again, you can see the beautiful panoramic views from the side of the house. From the back, you can see just how grand it is, and of course, an elk just casually strolling through the construction site. Because when you live in the Rockies, that's just every day, which uh, just doesn't get old, no matter how many times I go there and how much time I spend in the Rockies. So we have more shots of the property. We have some videos available on our website and in our due diligence room. But I just wanted to sort of give you a little bit of a preview of what it looks like. And of course, the shot on the left is you walking right into your front door, and that is the view from your living room. So again, there's not a lot of places in Canada that can boast a view like that. This is the only slide that we kept in our presentation that has really any level of detail. And I wanted to spend just a little bit of time here to, really hammer home the point that we're trying to make, and really the investment thesis that we have with Serenity Point, in that you can invest in a condo in Canmore somewhere between 600 and $700,000 as a total investment price. However, when you do that, you really are at a mercy of the marketplace. There's very few developments that have really amazing amenities that would set you apart from the next condo, the next townhouse. So you're really just working in the market dynamics when it comes to demand, when it comes to pressures on price, and you do have some healthy yields on a property like that, but you don't have a lot of control and you don't have a lot of attraction to that truly luxury segment and the wellness tourism that's growing. And the potential upside, of course, on a condo is much less than what we would be offering at an $8 million luxury villa. So, right out of the gate, when it comes to occupancy, max four people in a condo, we're looking at 14 plus between the six bedrooms and some other spaces that we look to make available for larger groups. We also have, again, three full stories that are fully developed, 5,500 square feet plus decks. And really, I think what sets us apart is that extra level of service, an extra level of amenities, almost making it like a Nordic spa in a way, having a hot tub, a yoga, a sauna in house, a cold plunge, and everything else, and then having that level of service. Again, the other thing that would set this property apart is the yield. Not only are you getting really strong yield from a luxury property like this, based on our fairly conservative projections, there's also a personal use component that we value at $30,000 to $40,000 a year per LP. And I'll spend a little bit of time talking about that personal use component in the next couple of slides. But one other thing I should say is that we're going to be sharing a much more detailed marketing deck for those of you who haven't seen our marketing decks in the past. I just really condensed everything for the purposes of this presentation to really just give you a high level overview as a final recap. And then we have a full data room and full marketing deck that will be available to all of you if you want to look further. So financial highlights, traditionally we would show several tables, but really every time I have the conversation with somebody, it boils down to two questions. What's your yield and what's your IRR? Um, the quick answer to that is our target yield is about 18% cash on cash by year 5. And that's annual per annum. And our 5-year IRR of about 25% annualized. I don't love IRR because IRR implies an exit. I do understand the need for having that statistic there and why it's a very common question, and it's especially a common question from the institutional folks. So when I talk about exits, I'll elaborate on why I personally don't love that measure, but that is a very healthy IRR compared to some of the other projects that you could be involved in the real estate space, only to be competing with really truly development type projects where you would see numbers like that. So the total value and exit strategies, I think this is the slide I want to spend most of the time on during this presentation, because we bring a lot more total value than the traditional investment vehicles when it comes to real estate. And that comes from really three components. Number one is the equity, in that RLP owners get direct deeded equity in the particular project. So in this case, in Serenity Point, and the title will be held within the limited partnership that you then own as an investor. We do have that personal use component where each one of our LPs has an annual allocation of points that you can then spend to stay at the property. And the value of those points, again, for the purposes of this presentation, I value that as about $40,000 or 10 nights at $4,000 a night as a nightly rate. And of course, there's the rental income. And we're acquiring this property to operate it as a short-term rental destination for that ultra luxury traveler, and we're aiming to have very strong rental returns from that. Over the period of 5 years, we believe that based on our projections and the targets we've set for ourselves, that per unit or per one share, you could be generating upwards of $460,000 of rental revenue cumulative over the 5 years. And that, of course, comes on top of your equity appreciation and on top of your personal use component. So and we are very unique in that there are, of course, your traditional real estate funds that offer you strong rental returns. There are development projects that would have strong equity return components, but there's really nothing in the marketplace that has all three, to my knowledge, and that's why we've had such tremendous response from the folks that we've been talking to, both on the institutional side and on the retail side. Exit strategies, if I'm totally frank, the exit strategy, and specifically the liquidity of luxury assets, is one of the reasons why Luxara was formed. Luxury assets tend to sit on the marketplace for a long time. They're difficult to acquire. They're difficult to dispose because it's a small buyer pool, generally speaking. So by us bringing this innovation to the marketplace and allowing a much lower entry point to our investors into a property of this caliber, that opens us up to a much broader pool of investors. And it also allows us for a lot more exit strategies as a result of that. So the primary exit strategy for an investor into Serenity Point and our other projects would be to just simply resell your LP unit through our network. Again, we've been working really hard on building up our network across the country and then across North America and Costa Rica. And we believe that we would have a list of investors that are ready to buy your unit if you do decide to dispose of it at any period of time after your initial 12-month commitment. The other strategy that I like particularly for Serenity Point is refinance and redistribute tax efficiently. I think with a lot of the real estate investments, they're used for long-term value creation and for tax purposes. We're certainly no different, and I believe that structuring the way we're structuring and using the tax strategies that we plan on using, we have a very strong tax benefit to our investors as well. So the refinancing is really only one of those benefits, and we can get into some of the others through the Q&A. But I think that would be the main strategy for Serenity Point, because I think there's really phenomenal long-term appreciation for Serenity Point because of all the things happening in Canmore. So I think refinance perhaps in year 5, redistribute the capital, and then continue operating that asset until maybe year 10 or 15. That would, to me, make the most sense. But of course, that's something that we'll have to monitor quite regularly. The next strategy is LP unit swap. So as we grow our portfolio, again, we anticipate to have several properties in the Rockies. We have properties in Costa Rica. We're looking at Portugal and Spain. So we would look at a value adjusted LP swap if you want to move to a particular market where you either want to spend more of your personal time or you believe that the market fundamentals are stronger. Whichever the case may be, that's something that we're actively working on right now and how we can facilitate that. In 2028 and beyond, we also have a planned buyback program where Luxara would redeem a particular unit that's looking to exit, and then we would take on the risk of resale ourselves. So you can have a pretty quick liquidity event in that stage, and then we would take our time reselling that unit to our investors or to institutions. And again, 2028 seems like far away, but realistically, anybody coming into this investment or any of the investments that we have planned for 2026 and beyond, that's sort of the minimum period you'd want to be invested into something, right? I mean, traditional PE funds are 5 to 7 year holds. A 3 year would be a little bit on the shorter side anyway. So I think we'll be ready for those redemptions over the more traditional investment horizons. And the last strategy, of course, is just a simple home sale, right? With the super majority vote of the owners of the LP, we always have an option to dispose of the property and then redistribute the capital back to our investors. Again, there's some tax planning that comes to play there with return of capital versus capital gains, but that's some tax planning to get into later on. But really, what I want to stress with this slide is that our uniqueness comes in both the combination of the benefits that you're accruing as an investor in a project like this, and also in the flexibility that we offer when it comes to exit, because you're not at the mercy of a fund that has a very defined exit strategy and exit timeline. There's a lot more flexibility for you as an investor. So this is probably one of my favorite graphics, and I want to spend a little bit of time also explaining the model itself and what makes us different, because we do have a number of questions coming in all the time. The most popular one is, are you a timeshare? And I think by the time I'm done talking about this slide, I think we'll dispel that notion entirely. So when we were first writing the business plan for Luxara, our main focus was on researching the negative feedback of the traditional ownership models. Okay. And we then gathered all of that negative feedback, and then we sat down and we brainstormed, how can we solve every single pain point from the traditional ownership strategies? So let's just park that thought for a second. Co-ownership, as a fourth ownership model, in addition to the three that I'm showing here, is certainly not new. I'm not going to sit here and take credit for inventing co-ownership. Co-ownership has existed forever. If your family owns a cabin somewhere, you're co-owning that with your family. People co-own boats and planes and all kinds of things. Where we come in and where really we're innovating in how we're doing that from a legal perspective, from the compliance perspective, from a management perspective. And I'll talk a little bit about that when I talk about this Venn diagram here. So when I think of the other traditional ownership structures, timeshare, I'm sure everybody's familiar, but they're notorious for being use only. So you would purchase basically an allocation of time, usually it's a couple of weeks a year, for initial capital investment, and then you have your annual maintenance fees for most of them, and then you get to spend your weeks that are allocated to you at that property every year. They don't tend to have any resale value, really, and there have been companies that sprung up that specialize in breaking timeshare agreements. That's how fantastic timeshares are for those of you who haven't experienced timeshares. The There are companies, though, that have put some new spins on timeshares, and one in particular is our competitor in the US, and they're a fierce competitor because they've done, last I checked, about $1.6 billion of transactions. It's a little company called Picasso. And what they do is they acquire ultra luxury homes, and then they offer, just like us, 1/8 or 1/10 shares in those properties. And then you purchase that, you have your annual dues, and then they provide you that level of service and ownership. But there's no return component, where you just have that experience, right? At a much more elevated level than a traditional timeshare. Then there are vacation clubs. So vacation clubs, and I look at companies like Inspirato, Destination M, where you invest again upfront for a membership in this club, and then you have access to their portfolio worldwide, or whatever countries they might be operating in for that initial fee plus some annual dues. And then the last one is the fractional ownership. So again, for those of you who have invested in real estate in the past, I'm sure you've come across it. Even in Canmore, there are opportunities in a lot of the condo developments where you can buy a quarter or a half of a condo development. And then the condo manager then manages that property, and then there's some profit distribution, or you could trade your time for money, on so on and so forth. So if I think of all those, what are some of the best things that they have? Well, it's the fractional cost, it's the high-end management, and it's the shared access. And we've taken all of those good things and we tried to solve all of the bad, and that's how we really came up with Luxara, right? So in the next slide, I'll talk a little bit about how exactly are we doing that. First and foremost, just like everything else in life, partnerships are very important. And we try to specialize in what we're good at, and that is identifying properties, structuring them properly, and then taking care of all the compliance and all the securities regulations and high level management. But then on the ground, we have really strong partnerships with local vendors, with property management companies. In Costa Rica, we've had a long term relationship with a company called Zindus. That's a really trusted partner there. And in Canmore, we have a deal in the making with Vacations in Canmore that will bring that on the ground knowledge and expertise of operating an asset in Canmore and bring that next layer of service that involves all the things I mentioned before, like a concierge and the chef, and private tours and all other things you would want to see in a luxury travel experience. The next layer of this is the legal structure. So I mentioned in passing that we're a limited partnership, so that's our that's our structure. We have a limited partnership that's acquiring the property, and then we're selling the units of that limited partnership to our investors in increments of 1/8 or 12.5% allocation. You can purchase multiple of them if you wish, and that's, as I mentioned, the institutions are looking at purchasing multiple units in this project and in our future projects. The governance is another interesting area. The value of Luxara is really in the governance, both from the high level of everything that comes with structuring the entity, compliance, tax returns, annual audits, annual reporting, and everything else in between, right down to getting insurance for the place, negotiating with vendors and property managers, and so on and so forth. And we take on all of that responsibility as the general partner in the deal, but we do give a lot of power to our LPs in that any major capex, any borrowing against the property, and the ultimate disposition of the property is up to our LP owners. So that's one big differentiator with us. I already talked about the exit strategies. Again, what we bring is a much simpler and much clearer way for an exit for our investors than a lot of the traditional structures, and also a lot more cost effective. Usually a property sale comes with sales commissions and various other fees that come as part of that. We can close very quickly. We can have very liquid exits, very quick exits, and very efficient exits when it comes to taxation and when it comes to exit fees. So that's another big benefit of Luxara structure. One other thing that I'll mention, why we selected points for our system versus allocating specific weeks or just giving blanket, you as an investor get X days. The points is really a gateway to our portfolio. So as we scale our portfolio across Costa Rica, across Portugal and Spain, and into the Middle East in our plan, that point pool allows you to then travel within a portfolio without having to invest into those specific assets. So, for example, right now, we are raising capital for two assets, one in Canmore called Serenity Point, and then this beautiful home in Playas del Coco in Guanacaste in Costa Rica. And both of these homes would benefit from the exchange program. So if you're an investor in Villa Vista Bahia, you can trade your points for a stay in Canmore with a willing LP unit owner in Canmore, and the other way around. The transparency of value, again, is something that's really important to us in that, for full disclosure, this property, even though it looks so grandiose and it sits on 2,500 square meters of land in beautiful Costa Rica, the value of the property is only about $2 million Canadian when you convert it. Whereas in Serenity Point is about 8. So we will disclose the valuations of all of our properties, the nightly rates of all of our properties to our investors, so that when you are trading points, you are benefiting from the value difference, right? So for example, if you're an owner in Serenity Point, a value of your point is a lot higher than an owner of Villa Vista Bahia. So you get to spend more time disproportionately in Costa Rica than in Canmore. And as I mentioned already, the smart points is really just the key to our global portfolio, right? That we borrowed that idea both from the vacation clubs, but also from the home exchange programs. My own home that I'm sitting at right now here in Calgary, we've had it in a home exchange pool for a number of years, and we've benefited from that tremendously, traveling virtually for free to many destinations around the world, which has been truly fantastic. And I think that's something that I want to bring to our portfolio as well, is that ability to benefit from more than one destination with one single investment. And of course, the ability to diversify investment if you wish across the entire portfolio. So, just a quick note on, I mentioned why Luxara started, and it was to solve that liquidity problem. It also started as, for me personally, it was to create a more accessible way to luxury. And I love this quote that we put together when we're brainstorming our mission and vision, is that our vision is to put unparalleled luxury experiences within the reach of those who dream big. Luxara started for me as a dream when I found Villa Vista Bahia in 2021, and I didn't have enough cash in the bank to buy a property in Costa Rica outright. So I came back to Canada. I spent 3 months raising capital, and in May of 2022, we finally acquired Villa Vista Bahia, and We've been operating it since 2022 under this co-ownership model, right? So that's the sort of experience that we're grounded in. That's our philosophy, is to bring exceptional investment opportunities and exceptional experiences to our investors, and that's something that I can stand behind because that's a lived experience for me. Um, there's great people behind every company, and there's no great company without great people. And I firmly believe that. I have a truly phenomenal team working on the deal here in Canada. We have a phenomenal board of advisors. We have some really amazing partners that are working as either capital finders or counsel, on tax side, on legal side. The two guys here on the page, Sean is our expert in Canmore. He's been in Canmore for a while as a realtor. He knows that market inside and out. And he also has a really deep understanding of the operational aspects of property management, specifically in the Rockies. And Dex is, I call him the finance wizard. He has done some really incredible things when it comes to capital structuring and debt structuring for our deals, and we couldn't really do it without him. As I mentioned again, the advisory board is another 7 real strong veterans in the industry, from developers to lawyers to former manager of the Four Seasons, really folks who spend their lives living and breathing real estate and investment. And they've come together and rallied around this really amazing opportunity that we're trying to capitalize on here, with Luxara Canada. Last little thank you before we get to the Q&A. So as we approach the final close of the Serenity point, I did want to extend a special offer for those of you who have been with us on this journey, and certainly for those of you who are attending today. Usually we have a buyer fee. That buyer fee is usually there to pay for legal expenses, onboarding expenses, the KYC, and everything else that comes with onboarding a new investor. So for any commitments before December 15th, I know it's next week, we can talk about extending that privately, but for any commitments before December 15th, we're waiving that waiver fee. And also, if you are a realtor or somebody who's working in a capital raising world, we do have a structure in place where we pay finder's fee on the capital that's brought to Luxara. It's 3% on the capital raised. So in this scenario, it would be $16,500 finder's fee. So as a special bonus to both of those offers that I've got here, is I'm contributing my personal points in Vista Bahia to extend a 7-night stay at Vista Bahia for any of those commitments before December 15th. And wanted to share this little video. Our marketing team hard at work. Just love this little video. It just really highlights the snow and the sand concept, us thinking of that global traveler who might want to spend some time in snow, some time in the sand, and really access that global portfolio. So, pretty stoked about that, and we continue to grow our portfolio, of course. So, that brings me to the end of the slides. Again, as I said, I really shortened the presentation today with the help of Seth and our marketing team. I just wanted to make sure that we have some questions at the end that would give everybody ample opportunity to get them out and to get them answered. And then what I'll do is, as I'm monitoring the chat right now, I'll maybe answer a few of the questions that we usually get from our folks. And then as I get more questions coming in, I can certainly address them. So I don't see anything at the chat yet. So the number one question is around exits. And I think I've spent a good amount of time talking about that. There's certainly different options there. And my preferred strategy for Serenity Point in particular, as I said, is refinance and redistribute capital tax efficiently. But there's other flexibility there, of course. The next most popular question is probably around the timing of the investments. As I said, we're looking towards the close of the fund, and we're slated to do that towards the end of December, early January, as the final close. But we're calling capital in two tranches. So we're looking for our final commitments by December, but we're calling capital in two tranches, 50% in January, and then the remaining 50% in May. And the reason for that timeline is that the property is actively being built right now. I was at the house yesterday. They're making phenomenal progress. It's looking incredible. They're slated to finish it sometime in May. Our contractual possession date is June 1st, and that just gets us to that timing. That we get the initial 50% commitment in January. We put the final deposit on the property, and then the remaining 50% is then to just have enough cash on close, and that's when the debt is going to kick in as well. So. One other thing that I didn't specifically mention that's also a popular question is, are you developing the property? Will you share development reports and all that? The really interesting thing about Serenity Point and why I was so interested in it personally was that we don't have to do any of that. We're buying a completed asset on June 1st. The developer and the builder are taking 100% of the risk, all the financing, all the delays, everything else, and all the headaches that come with developing. They're taking all that risk. We have agreed upon the purchase price, and we've agreed upon a delivery date. And we have some other clauses around delivery timing, but the bottom line is that we have no risk on the development side of things. The asset that we're going to be getting in June is going to be fully finished, fully warranted, and we don't have to worry about anything up to that point. Of course, we'll provide updates. I'm there all the time. Sean lives in Canmore. He's there all the time. So we're checking on it as we're progressing. But we don't have the same sort of worry and stress and need to report on the development because we don't take any of the risk on development. Okay, so one question did come in the chat. Seems like a great opportunity. I'm wondering if when additional opportunities arise, will existing investors be notified first so we can participate? Yes. So again, what I'm really focused on, and shamelessly, I'm going to plug my podcast. That's not monetized. Don't worry, I'm not getting paid for it. But I started a podcast when I started Luxara. And the reason for that podcast was to really do a deep dive on the why, the how, the what of Luxara, and open up the kimono, if you will, as to how we're building it, what we're thinking. And one of the key things that I believe in is people. And specifically when it comes to this question, is the community that we're going to be building. Now, I want to have a really strong community of like minded investors that we're going to, of course, treat better than anybody coming in from the outside. So once you're an investor in Luxara, or even once you're through the initial introductions and you're part of our community, even before you've invested with us, but you've now gotten to know us, we're going to be bringing those opportunities to you first. Yeah, so we'll existing investors will have the first right of refusal on any new project that comes on board. Then the folks in our CRM will be the next to participate in any future projects. And only then will we go out of our existing network to start marketing the deal. So, yes, we will notify our existing investors first, and you'll have the first opportunity. Um, to give you a little bit of a sort of pipeline of where we're headed and what we're thinking, as soon as Serenity Point closes, we're going to be looking for another 2 to 3 projects in Canmore, and I think that's where we're going to cap it. I don't think we'll go beyond 4 or 5 in any one particular market, just because we operate at such a niche and high-end segment that I don't want to cannibalize any of our own demand. So we'll operate 3 or 4 or 5 assets at most in any given market and really hit on that service and on the uniqueness of our offering, which of course has its limits when it comes to demand. So that's our initial focus, is another few assets in Canmore. Beyond that, we're already exploring communities like Revelstoke, which is, again, another amazing community in the Rockies. And then there's a few others that have come into a conversation, like Invermere, Golden, and some others. But Canmore, Revelstoke, those are the first 2 that we're looking at. And as we continue developing our Costa Rican portfolio, we'll start in Guanacaste. Guanacaste is a very popular tourist destination. That's where my home is, and that's where the company that I'm also part of down there, this Indus Hospitality Group, we manage 175 luxury villas in Costa Rica. So we certainly know how to operate a luxury asset and how to really cater to that sort of traveler. So we're going to start there, just because we have all the relationships with contractors, with property managers, and everything else you need to operate within our model. And then we'll start expanding into the markets a little bit further south, like Nosara and Santa Teresa. And then from there, and we'll look to maybe go even further south into other markets there. 2027 is when we plan our first international purchase beyond Costa Rica, and that's going to be in Portugal. Right now, we are working on some leads in Azures, the Portuguese islands, and then there's also a couple of places on the mainland Portugal that we've entered in some early discussions with the folks down there. So that's sort of the vision. That's the plan of where we're going with this. And as I said, not only are you getting the first dibs on all of these investments as a member of our community, you also get to benefit from all those investments as they come online through our point exchange program. Okay. So nothing else just yet. So then I'll just go through the classics. The other couple of things that have come up was, what happens if I invest and I am from, say, Montreal, and I don't make it out to the Rockies to utilize my personal point allocation? What happens to my points at the end of the year? Um, Fantastic question. And as an interesting point, when it comes to Serenity Point up to this stage, the majority of the interest that has been expressed was purely from an investment perspective, because the folks, I think, really understand the phenomenal opportunity that's in front of us in Canmore, and the really strong returns that already exist in Canmore and that are only going to grow as more and more tourists flock into that destination. But we do have the point system for a reason, and we do have a structure to address that question. So we have a waterfall in our limited partner agreement, where the 90% of our net income is distributed pro rata, or more or less evenly, based on your ownership. And then the remaining 10% is the point buyback pool. So if I'm one of the owners and I've used all of my points, I don't get to participate in that next 10%. If you're somebody like in my example, you're an investor from Montreal and you just didn't make it out to the Rockies this year, your points are then redeemed by that next 10% of our net income. And in a good year, that could be a pretty significant sweetener as we scale our occupancy and as we scale our nightly rates. So that's been a popular question as well. Another popular question has been as far as timelines, which I think I also answered that, we're looking to do two capital calls in January and in May, and then take possession on June 1st. And as we think about that, we're already thinking about establishing partnerships from a marketing perspective with, local influencers, with local wedding planners, with local event planners. We'll have a beautiful grand opening as soon as we take possession, and we'll invite, again, all of those folks, as well as realtors and other business leaders from Canmore and from Calgary, to come and look at the property. And then we'll start planning additional partnerships with, for example, the Silvertip Golf Course, the other golf courses in the area, the ski hills, to not only deliver that elevated level of service, like, for example, a preferred tee time at Silvertip Golf Course, but also to then have a funnel for folks coming in and staying at our property, or even using our property as, say, the wedding venue, which I think it would be prime for. I was on the deck yesterday just looking at the Three Sisters, and again, it would be a perfect spot for somebody to get married. Being totally biased, but I think it really would be. So there's a lot of really interesting opportunities there. And even this morning, somebody reached out to me about partnering up with athletes who are influencers, who would be interested in promoting the property in particular, or staying at the property, and then, of course, having a partnership for leads. Okay, another question come in. Is it first come, first serve for highly desired time bookings like Christmas, for instance? So that's the problem that's never been solved. Okay, in a traditional timeshare world, where usually you would get a specific time allocation of, say, Christmas or Easter or Thanksgiving, and then you might have some sort of rotating schedule. So we tried to solve that in two ways. Well, one was the point system, where we don't get into you get Christmas, I get Thanksgiving conversation. So we sort of are agnostic to timing. But where we are different is we introduced a different rate for different times of the year. So, for example, as an investor, you would get 100 points per year to allocate as your use time. The low season nights would be 10 points per night, and the high season nights would be 20 points per night. So that, for example, in Canmore would be between something like an April and September. That would be a high season. So you would get 5 nights under your point allocation during that time. And then in the shoulder seasons and during the winter and some of the slower periods, you would get 10 nights under that math. Specifically around things like Christmas and Thanksgiving, what has worked for us well in Costa Rica, where we did run into these issues as well, we actually introduced a cash premium for those nights. And that's simply because there's really, if you think of it in property management terms or rental terms, there's really three levels of nightly rates, or ADRs, where you have sort of your standard going rate for high season and low season. And then you have your special rates for the holidays or particular long weekends. So for those, we simply take whatever that premium might be. So, for example, if the high season night at Serenity Point is $6,000, but Christmas due to demand is $7,500, we would take that delta as that cash premium, and that would be something that the participating LP would have to kick back in, just to be fair to the remaining investors, right? Because they are foregoing that higher ultra demand time when it comes to their returns. So you, as an investor, really have to kick something back in to the group, just to be fair. And we found that that system works better than anything else that we've seen. And what we found is that people simply divert their use time to other times of the year to really maximize their rental performance. Again, if somebody's 50th wedding anniversary is coming up and they're really set on Christmas, again, we'll be civil and we'll have that conversation with our investors. And of course, I think people would be understanding for something like that. But again, just in the spirit of fairness, we just wanted to make sure we have a system that drives the owner use time into the non-peak times. So you still get to enjoy the amazing property, but then you're not cannibalizing our rental performance. The other thing that I didn't quite explain that has come up a few times in the conversation is, why 8? Why 8 investors? That math, I won't even take full credit for that math. That math actually came from one of our competitors. But what it's based on is it's based on the fact that if you have the time allocation of, in this case, say 10 nights, and you have 8 owners, that's 80 nights per year that you're taking out of the rental pool. If you do that, that still gives you, I think, 82% of the remaining time available for rental. Current market average, as I mentioned in my presentation in Canmore, is somewhere between 77, 78% across all properties. For 5 plus bedrooms, it's a little bit lower than that. It's high 60s, low 70s. So that still gives us ample time to hit our target occupancy rates without really eating into any of the owner time. As we get into higher occupancy numbers, like let's say we get to 85% occupancy, well, at that stage, I think we get into more interesting conversations where, the owner use time is actually starting to cost us. But until then, I think we're pretty comfortable that there's room for both. And that's why 8 works. Because we're talking to institutions who are going to be investing in our projects, they wouldn't be utilizing any of that personal use time, which gives us even more buffer room. So, for example, is if half the raise is institutional money, half the raise is individuals, now we only have 40 nights that we need to work around, which then gets your total occupancy limit up to high 80s or 90s, when it comes to percentages, which is again very healthy numbers. And if we're sitting at 90% occupancy rate, I think we have much bigger problems somewhere else. Okay, one other question's coming in. I'm thinking about this as being a great location for company retreat. Can it host those? Yes, absolutely. So what we're really trying to do is we're trying to plan the home so that it can be both a family retreat, but also something where you can have, like, say, an unrelated golf trip or a corporate retreat or something like that. So there's 6 bedrooms. So that's at least 6 folks that can be totally unrelated staying in those rooms. We do have one room that's going to be bunks. So 2 queen, 2 sing, or 2 doubles as bunks. So you could theoretically again have higher occupancy there in a non-shared way. And then we're also again looking at some convertible furniture and some other cots that we could utilize some of the other rooms in the home that are not specifically designated as bedrooms, but we would be able to house a few extra people that way, so that you can have an actual, say, board retreat, and you have 10 board members. We could probably accommodate something like that if they're all unrelated. As you get into the larger parties, they would probably have to be related, like a family, where we could hit those numbers like 14 or 16 people occupancy numbers. But yes, we can comfortably, I think, host a company retreat. And that's sort of the vision, I think, with a lot of the investment in Canmore. I think there's been talk of a conference center coming to Canmore. There's certainly a lot of business travel happening through to Silvertip and other golf courses in the area. And even folks that, again, that are overflow from some of the amenities in Banff, or the golf courses in Banff, they would stay in Canmore. And again, they would require a larger home, and often a home with more amenities than a hotel or a condo would offer. So yeah, certainly can do that. Okay. Um, those are some good questions. Another one that we had, that came up through a few conversations, whether around foreign investment. So foreign investment is a pretty interesting topic in Canada in general. There are some pretty serious restrictions on foreign ownership of real estate when it comes to the big cities. Canmore does fit that profile, I believe, last we checked, which restricts the foreign ownership to 10% direct ownership. The one little caveat with this one in particular is that this technically is a development project. So we have upwards of 25% capacity or two LP units that we can bring on as foreign investors. And also, a structure like this or a fully fledged fund is really about the only way for folks to benefit in real estate investing as non-Canadians, as it stands right now. That's from my current understanding of the legislature. I think that's set to expire in 2027 in its current form, but I have a feeling that it's something that's going to get renegotiated and renewed. And if I think of some of the other markets where I have personal experience, from my time in New Zealand, they introduced some really strict ownership rules in New Zealand. I know Switzerland is the same way. Norway is much the same. So I think that's where Canada is heading on ownership restrictions. So you'll have to get really creative with your ownership structures and vehicles like Luxara to give access to international investors to have a minority ownership in Canadian real estate. Okay. All right. Well, there's 5 minutes remaining. I don't think there's any more questions coming in. So again, I just wanted to say a huge thank you to everyone joining us through our past webinars, and of course today. We're always happy to have additional conversations as we look to wrap up this raise, and of course as we look at growing our portfolio in the Rockies and beyond in 2026 and then onward. Um, I think I'll pause here. I'll wish you all happy holidays and a fantastic new year. And you'll be hearing a lot more from us in 2026. And I look forward to having those conversations. Thank you, everyone, and take care.